Hello, everyone, and welcome to our webinar. I'll be moderating this webinar with the Seismic team. I'm Andrew Korn. I'm the founder and CEO of E5A, which is the marketing firm for Seismic for this offering. I'm the former Chief Investment Officer of Beacon Trust, and prior to that, Clear Asset Management. Traditionally, we start off with each of the Seismic partners going through their backgrounds. Stephen is our CEO, Eric is our Chief Investment Officer, Alice is our CFO, and Jan is our Chief Legal Officer. We have limited time and a lot to cover, and we're going to do detailed bios in the email that will follow up this webinar. So let's get right to it. Stephen, so venture capital, this is a term that's been going around a lot. It's going to come up a lot today, and not everyone may be totally familiar with it. Can you please define it for us?
Venture capital is a corner of the financial sector that funds private companies in their early stages. Some VCs get involved just as companies are getting started, and others wait a little longer and come in when companies are getting some traction. At Seismic, our sweet spot is right after a company has a product and a customer. In our estimation, that's where we can achieve the best balance between risk and reward, especially since we've designed Seismic so that the bumper guards are up. Our core team takes care of all the aspects of running a business that are required, like accounting and providing benefits, but can easily interfere with innovation and making customers happy. At that point, the founders of the companies that work with us can concentrate on creating value, developing technology, building their products, and acquiring customers. That answer the question, Andy?
I think it does, but I'm going to hit you with one more, which is Seismic. Why did you select Seismic as your name, and is that part of the differentiator from other venture firms?
We like the name Seismic. We like that it talks about shaking things up. Seismic, the Richter scale, earthquakes, moving the earth, shaking the ground are things that we think are important. And we think all the companies that we're looking at have the potential to do. So when we open our doors and we welcome in our investors, we want people to feel like they're really investing in companies that are going to shake their markets. There are about 1,000 venture capital companies in the US. Our model's a little different. I noted before that we keep those bumper guards up so our companies can thrive. Second, our funding is designed to last for a long time. So our companies can focus on getting the job done rather than having to stop again and again and again at every milestone in order to raise their next round of capital. Third, we're shaking up the venture capital industry by welcoming all investors. Typically, if you couldn't write a check for $1 million or more, you couldn't participate in a venture capital fund. We open the door at $1,000. Typical venture capital companies charge their investors fees for managing the assets. We don't do that. We own the same stock that our investors own. Everybody wins at the same time. It's probably worth noting that venture capital has produced just astounding returns for institutional investors like pension funds and college endowments. This has been cut off to regular people in the past. And that's really one of the things that we wanted to change with Seismic. So overall, we're shaking up the industry. We're shaking up how companies are getting funded. We're shaking up how companies can work with their capital backers. And that's why we called it Seismic.
I love that. And, I've been reading, and, the nerdy institutional publications that I like to read, like
Yeah, we
Institutional
were published
Investor.
there in the nerdy institutional publication.
Yeah, but that is how these big pension funds and the college endowments have had such great years. A lot of it has been due to venture capital. So we're talking about selecting companies that can shake things up. So there are so many startups, and Eric, you've said you've already seen 200.
Right.
Can you share some of the criteria that you use to select companies?
Thanks, Andy. Absolutely. I mean, one of the things we look for innovation. You know, we seek those innovative disruptors with a high probability of success. Those that make us ask, like, why didn't we think of that? You know, seismic innovation should displace industry incumbents, increase efficiencies, and attempt to rapidly gain market share for our investors and for themselves to grow. Now, we've identified so far 14 companies that are in our offering memorandum that have a chance to do that. And as we develop, we'll likely add more to that as we see more companies, and we'll add to that list of 14. Other thing that's really important, and I learned this from Tim Draper when I was doing some work with his companies, is that leadership is extremely important. You know, this is from from having integrity and just that drive. The leadership, the leaders of these companies need to have that drive for success. And as he said to me, his experience, the best VC innovators, yes, obviously the company and what they do is important, but the business and the leadership is extremely important. And we look for that. And we look for people that will be team players, because we're going to be, as Stephen mentioned, we're going to work directly with these companies. And so we need to have a camaraderie. We need to have the ability to get along and the ability to have confidence in each other. And then as Stephen mentioned as well, these companies need to have a product and a customer. As he mentioned, we put ourselves in a pre-Series A bucket, and we also work in turn. It's not just our team, and it's not just our advisors. We work with diligence groups that help us with our valuation metrics, that help us with potential exit strategies, and help us just overall in our underwriting strategies as well. So it's not just the 17 or 18 of us that are involved with Seismic from a management and advisory point of view. We work with outside groups as well to help us with some of that work. As I said, we've seen over 200 companies, and we continue to see them. And so those are the three most important things. That's product and customer, leadership, and innovation.
That's great. So I'm going to ask a quick follow-up, which is, seismic themes. Are there some like overarching themes where you like to invest?
Well, we've looked at, we have, I'm just going to mention some of the companies that we are involved with. One has been in the med tech field. We have a company out of Princeton, New Jersey, that is working with women's health in all phases of a woman's life, 4 different phases. Tremendous leadership team, terrific innovation, as we see now, which happened with COVID and even pre-COVID, and now if there's going to be post-COVID, hopefully soon, people are using more telemedicine, because people don't want to be waiting in a doctor's office reading magazines you haven't seen in 20 years and wait a half hour or an hour, and maybe the doctor doesn't even see you that particular day, as we know internally here. We love the gaming industry. Talk about a boom industry prior to COVID and now. We have a company that's an innovator, great leadership team that led some of the major gaming companies that provide a platform for all 5G technologies and mobile gaming. Their customers, and talk about a customer, they have AT&T, Microsoft, and Google. And we're very fortunate to have them, and we're working on moving forward with them. Other thing that is e-commerce and supply chain. I mean, right now, obviously, we have a supply chain issue nationwide. Out here in California, obviously, the ports are they can't get these containers off these ships and move them into a place. There's no place to put them. These folks have terrific logistics. They have warehouses to take some of these products, both here in California and in the East Coast, and as well as they're moving into Texas. That's not going to change. E-commerce is not changing in a post-COVID world. So that's something we're looking at. And also something in the hybrid office environment. What's the office going to look like? How do you motivate your staff? Well, we have a company that's looking to do some of that work. And we also, again, we're as everyone is into fintech, we've identified two fintech companies, one here in the US and one in Africa and Asia, that helps the unbanked be able to access the banking system, both with traditional currencies and with some levels of cryptocurrency. And last but not least, we look at companies in the impact and ESG world. We have a company we're looking at to be putting environmental ratings, like bond ratings, on particular infrastructure, on cities and towns, and on certain products. So those are some of the areas that we're really continually to focus on. And I think that should answer that question for you, Andy.
Yeah, it does. And it's very exciting to hear about these themes and that you've already identified companies in them. So I want to throw a little cold ice water on the conversation and move over to Jan. Isn't that a great introduction and segue to you?
I'm the cold water. Thank you.
Well, one of the things I know that you focused on to help the company is studying why startups fail. And if you could talk to that for a minute, and then how Seismic is going to help ensure that doesn't happen.
Sure. Thank you, Andy. So what we did was, shortly before we launched Seismic, we commissioned a study of this sector of investments, and our studies analyzed about 35,500 startups that failed, because we needed to know the answer precisely so that we could somehow address it. The study found that that among the main reasons why startup failed were two. One was lack of funding and investment, which is no surprise, but the other was also internal organizational challenge. Things like the startups were spending too much time and money running themselves, or were unable to run themselves well, or as well as they needed to be competitive in that very, very competitive environment. So we found that empirical study, that 35,500 companies, we found that to be actually a point of opportunity for us, because what we do at Seismic, as Stephen talked about a little bit earlier, and Eric, is that we've structured Seismic to help our portfolio companies succeed. We provide them, again, as Stephen noted, we provide them with steady, wise, patient funding. And we provide them with a team of advisors and back office services to help the companies achieve their maximum efficiency. That way, with what Stephen discussed, is the back office support, the founders who have those brilliant ideas, who have that drive, who have been identified by Eric, whose finances are being reviewed by Alice, and those people can focus on what they do best, and we can help them. We can take off their plate the things that are just distracting them from their focus. Then again, we go even further, because what we do is we provide the companies with this entire ecosystem of other companies that we're involved with, and we allow them to interact. Not only allow, but we encourage them to interact with each other, and that becomes a pool in which they can learn, innovate, and benefit from each other. So we understand the failures, we understand the reasons for failure, but I think we've seized that as an opportunity, and we see that as, in fact, it's the reason we structured Seismic as we did.
Yeah, well, I love the whole idea and concept of guardrails, and that you've figured out what they need so they can focus on their product and on acquiring customers, which is the two most important things from my perspective. So another thing that's come up a bunch of times, even in this very short webinar, is ethics, leadership, environmental impact, and everyone's talked a little bit about it, but you're not specifically in ESG, the environmental, social, and governance is kind of the buzzword in investing. You're not specifically that kind of company, but it seems to be really important. Alice, you had mentioned it before. Do you want to take this question?
Sure. That in fact was part of the reason why I was really interested in joining the team, was making sure that impact was going to be felt beyond the bottom line, that it both goes within our company and is external to everything else that we're dealing with. We view that the traditional investor class remains less focused on ESG still, and yet these criteria are increasingly important to Main Street investors and consumers. So we try to make sure that we are not only maintaining our own perspective of it for us, but the kinds of companies that we're looking at and the kinds of management that they have, and making sure that they also fit in with that. As Eric had mentioned, one of the companies that we are so excited about is developing the first standardized quantitative environmental rating system for corporate and municipal environmental performance. And currently there's no standard for that. And there's no framework for any kind of objective comparison. And so while, we're starting to see people working around the edges at this, it's not on a quantitative basis. It generally is on some kind of ill-defined qualitative basis. And so we think having an objective metric, which can truly be transformative, and for the generations who will be most impacted by our environmental actions today, we think this is a really important tool for them. So, being able to both, as I say, sort of internally and externally live what we're talking is a hallmark of what we want to do.
That's great. Well, I'm wondering if that has influenced your decision to have $1,000 minimum and open this to investors, whether they're accredited, meaning very wealthy, or not, and doing this with institutions, because all of your backgrounds would, the easier route would probably be to go to institutions and ask them to invest. So who wants to jump on this one? Maybe Alice again?
Sure. Well, I think, you've kind of said it in your question, right? Which is, we really wanted to make sure that this was something that was available for everybody, and that they, in essence, would have a way of expressing their own beliefs in the way that they want to invest. I've been a longtime believer in impact financing. And, for a long time, there was this perspective that you had to give up one to get the other, right? So in order to do good, you couldn't get the same kinds of returns. And it's finally been demonstrated that this is not, in fact, true. And so people want to be able to take their money and put it into things that they believe in, because they're going to be living with the consequences of those things. So by having an investment level that is available for people who already would be looking to make investments, we're not looking to try to get people who shouldn't be putting money into an investment because they need it to pay their rent, but people who are already looking to figure out, how am I going to create my future for me? That $1,000 level seemed like an appropriate place so that they could have an entree into what we're doing, and yet have it be something that was workable for them.
Right. So I love that answer, and it just gets my mind moving to people own stocks, people own bonds. Very few people have venture capital investments, and it's such a diversifier, and of course gets people into investing in the private markets without having to make the selections themselves or manage those investments. So it's great having professional management. So with that, and thinking, gee, you're going to invest in seismic companies that are shaking things up. And as I stated earlier, I'm a shareholder. Let's say things work out really well. How do I, as an investor, how do I make money from this investment? And then what are the tax implications, assuming that there is some kind of payout? Stephen, could you answer that for us, please?
Sure. Just going back to where Alice was,
Sure.
and where you were, Andy, we want to just hit on the point that anybody who's investing in seismic is investing in what will eventually be a diversified portfolio. So where a single venture might be open to a single small or retail investor, you don't get the diversification that you would get if you were investing in seismic, because everybody's investments get normalized across all the investments that we made. So we create the diversification inside of seismic. So once you're in seismic, the there's a couple of things going on. The first is that the investment you're making is in something that's called qualified small business stock. And qualified small business stock gives our investors an important leg up. If you hold the shares for the holding period, which is 5 years, and you sell them then, and there's been a gain, most investors don't have to pay capital gains taxes on those investments. So already we've got a 28% or some number like that benefit built into the stock, assuming the stock price goes up. Our goal is to monetize some of the investments that we make, and at that point we would make distributions. So we sell a company, or a company starts to cash flow tremendously, and we have the opportunity to send money back to the investors. We'll do that, and at that point it's like any other dividend, and you have to pay taxes on it. At the end of your holding period, if you want to sell your shares, you can sell them, and hopefully you make some more money on that. And for that, you don't have to pay taxes. We have some things that we have to do on our side to make sure that the stock stays as a qualified small business stock. One is we can't be in the farming business, and there are a few other prohibited activities. And the other is that we have to maintain some ratios. In order for you to qualify as an investor, you have to have bought the stock from us at first issue, it's called, which is now. You have to buy it directly from the company. You can't buy it from anybody else. You can't gift it to somebody else once you own it, but you have to buy it from us at the first issue. We'll do our part to meet the requirements that we have to meet, and we're going to run Seismic with an eye toward increasing the stock price so that hopefully the gain will be there when you sell. No guarantees, but we'll do the best we can.
Great, thank you. So I have two quick housekeeping things. One is I can see people are already asking questions, and please feel free to ask them. There won't be time to answer all of them, but all questions will be answered in text form on the website, and we'll notify everyone when the replay goes up. But I do want to squeeze in, I see we're just about at time, but I really want to squeeze in a couple of questions. The first is, it's stated on the website that the minimum investment is $1,000. Can I invest more if I wanted to, and is there a limit? And I'm just kind of tossing that to the group. Who wants to answer that?
Well, there is, obviously it's $1,000 is the minimum. There is no limit on how much someone wants to invest. So we'll gladly take your investment capital. So it's a non-issue.
Great. So there's no upper limit.
There is no.
Yeah, we hope everybody will consider investing in Seismic as they look at diversifying and blending their investment strategy.
And the other thing too, Stephen, there's also a possibility of dividends, right? We do talk about that. We're not guaranteeing that, but there's a possibility as we move forward. There's a possibility of gaining dividends back to our investors as well.
Great. And then the other housekeeping thing I wanted to say is, I know Stephen was talking about the qualified small business stock. Everyone should contact their own tax professional for personalized advice, and none of what is said on this webinar should be construed as personalized advice. Wait, let me squeeze in one other question, which I'm going to direct to Stephen, which is, I become an investor, what should I expect for communications? Because once the offering's over, a lot of companies, quote, will disappear until there's big news. Are you going to be like, how are you going to handle communications?
Well, we love communicating. I think I mentioned before that I used to be a journalist, and I love to let people know what's going on. The minimum requirement by the SEC is that we have to report twice a year. We will do that. We also selected a platform where our investors' shares live, which is CoreConnex, that we can use to transmit information to our investors at any time. And it's our intention, when we have news to share, when things are happening, when we're in a publication, which we've been in many so far, to send those through the platform, and we'll keep everybody updated as often as there's anything to say, and maybe more.
Great. So I see we're 3 minutes over. I also see that there are more questions. So what we're going to do is we're basically out of time. So thank you everyone for coming. We're going to leave the chat open for another 5 minutes so that anyone who wants to ask a question can. And as I said, the team is committed to answering all the questions. They'll be posted on the website, and we'll notify everybody that the replay is there and also that the questions have been answered. So thank you very much for attending. Thank you, Jan, Alice, Eric, and Stephen.
And thank you, Andy, for
Thanks, Andy.
your
Thank you
capable
all.
hosting.
Absolutely.
My pleasure.
All right. Thanks, everyone.
Thank
Take
you,
care.
Thank
everyone.
you. Have a great day.
Bye, everyone.
Bye.